welcome back to my channel. So, I have my YouTube channel related to stocks that have more than 1,300 subscribers. So, but I am actually not uploading videos in my channel for the last 7 months. So, because I am actually a working person and I don't have time to spend too much to upload videos, and also on the fact that my videos are not getting much views, I am not actually uploading videos in my YouTube channel. But I want to just give an update on some things that actually happened in my YouTube channel. So actually, 5 videos were actually removed by YouTube from my YouTube channel on account of too much speculation, or they actually say I think YouTube removed because they actually was actually inciting investors to invest, and there was a risk of possibly there was a risk of loss to investors. So the companies that were removed from my YouTube channel are those the stock my YouTube videos related to Spoking India Limited. It's actually a textile company. So I actually had prepared the video sometime in 2022. If you see that company, Sport King India, so it is a textile company. You can actually see that it is now trading at 83 after split to from face value 10 to 1. It is equivalent to 830 of face value 10. So if you see the last 3 year price movement of this company, it was actually trading at just around 800 levels in 2024 and had a sharp price to 1470 before the split to face value 2 in September. So at that time, I think I had recommended for a long-term investment based on the trend. But if you see the 5 year chart of the company, it had actually given good returns to investors. So it was just trading at around 55 levels in July 2020, and it was around 200 levels in January 2021, and made a high of around 130 1000 in 2021, made an all-time high. Then based on the fall in earnings, it is actually falling, reported it actually corrected from around the high of around 1750 to around 700 in February 2023. And then based on the recovery in earnings, it actually bounced back. So in textile company, you can actually see that the earnings growth will not be always be ideal. So that is why actually always I recommend in all my channels that we need to actually watch the earnings, and we need to keep stop loss for all our investments. And regarding the quarterly results of the company, you can actually see that the quarterly results 16 crores as compared is almost similar to the previous quarter of around 14 crores. So if you see the year-wise results, it's actually made an all-time high profit of around 409 crore in 2021. 22, it is fallen to 96 crores in likely to be around 96 crores only. So there is a sharp decrease in earnings of companies. So based on the sharp rise in sales, sometimes the earnings of many companies can actually be very low. But as compared to FY22, FY20 levels of just 12 crores, actually reporting over 96 crore profit. So if you are actually holding the stock for last 5 years, you might be actually in good profit. But if you are actually investing in the peak of March 2020, when the stock price was actually at around 1700 levels, you will be actually sitting in loss. So this is always a risk in stock market. Based on the earnings, sharp earnings, the stock price can actually rise much, and if the earnings actually disappoint, stock price can actually fall. This is actually applicable only in because this can actually happen for most sectors, especially sectors like textiles and chemicals and tire sector also. So that I always may recommend that investors should keep stop loss for all our investments. And then actually that video was removed by YouTube. But another video that was removed by YouTube is related to Pancham Steel Limited. So that company is also a small cap steel company. So it is actually posted very weak results in the last 3 years, 2 years, and but it actually posted very good results from 10 crore profit. Actually reported 59 crores profit in FY22. So based on that recommendation, I had actually posted a video. But you can actually see that the company is actually having some dip in revenues and profits. So this kind of we actually need to invest all in a company only based on the earnings growth. So that is why I always recommend to investors to include what the earnings of the company, and also maintain stop loss for investments, and reduce the investment in a single company to a small percentage, so that the loss is minimized. I also had invested in this company, but actually based on the weak earnings, I had sold the company. So this kind of trend can actually be seen in many sectors like textile, steel, and so there can be sharp good rise in earnings and sharp fall in earnings, and that can actually result in the stock price movement also. So the stock price of this company actually was at all time. If you see the 3-year chart of the company, it actually was a high made of around 281 November. Now it's trading at 250. But if you see the 5-year chart of the company, is actually it is actually an uptrend only. Even though there is weak earnings, it has about weak earnings, it is still trading at very expensive valuations. So this video was also removed by YouTube, but I don't think investors might have made much losses on investments made in this company. But then the next company whose video was removed by YouTube is that of Rajratan Global. I just gave an analysis of that this company had given 2,600% returns in the last 5-10 years. So that is a fact. So what I mentioned is just a fact. This company has been a multi-bagger. So you can see that if you see the earnings of this company, you can actually see that this earnings has actually increased from 16 crores in FY16 to around 124 crores in FY22. So from there it actually had a sharp growth, and 124 crores, it actually had a dip in the subsequent last 2 years, and profit had fallen to just 72 crores, and it is likely to fall further to 64 crores. So it is one of the largest manufacturer of high carbon steel wires used in the production of tires. But there has been a dip in profit. Possibly it is a link to the tire sector, and so that is why actually, even though this company has given great investors investor for a 5-year basis, so it has actually given a 4:3 bonus in FY20 from the equity capital has increased from 4 to 10. It also had announced a stock split from face value 10 to 2. So it is 5-year investors might be actually sitting on the share price was 400. It has become 5 bagger or 6 bagger in the last 5-10 years. It has been a multi-bagger. So that was what actually Mark mentioned by me in the YouTube video. But any investor who has invested in the stock in the last 3 years or so, they might be actually seeing a loss, because after making an all-time high of around 1,276, it is now trading at around 403. After adjusting for the bonus and the stock split, it is still a good return for last 5 years. But if you consider the last 3 years, based on the sharp fall in earnings, it has actually fallen sharply, and now trading at 403 is still not very cheap. It is trading at expensive, considering that the fall in earnings, it is still very expensive. And I sold the stocks, but actually we need to consider that even though my videos regarding the return that is given by the last 5 years, it does not mean that it can always be a good investment. Always we need to actually always track the earnings of the companies when we invest in any companies in the mid cap and small cap segment, and maybe some large cap companies uh, will have better growth. But we have seen that in many sectors like paints and all. Asian Paints, if you, for example, is one of the largest company in the paint sector in India. It is also reporting very weak results, and is actually have profit is actually likely to fall to around 4,280 crores this year from around 5,500 crores. So even a good quality company is trading at 50 times can also result in weak earnings, and actually result the profit can actually fall. So his profits is just 1128 crores as compared to 1475 crores in the last year. So the stock price also corrected from 3,395 to around 2,200 levels. So this so if we, it means that if the top companies in a sector is also impacted, it can actually impact any small cap or mid cap stock also. We need to always keep in mind when we actually make investment in the stock market. And so that video was also removed. Rajratan Global Buyer video was also removed by me by the YouTube from my channel. And another video which was removed by YouTube is regarding Vijay Solvex. So the Vijay Solvex, uh, if you see the chart of this company, you can actually see that the Vijay Solvex was actually having good earning growth in the period from FY20 to FY22. It was actually reported sharp rise in earnings from 21 crore profit. It made a profit of 64 crores in FY21 and 54 crores in FY22. It is actually a company that actually manufactures edible oils like mustard oil and all. So it was expected that since it is a consumption company, FMCG company, so it can be assumed that it will actually have good revenue growth and consumption within India. But due to some reasons, I think they were not able to post an increase in sales, even though the sales actually also dropped, and possibly due to increased competition from other large players, so the sales has actually fell for this company. So that resulted in the fall in net profit to around 15 crores. So even though it was a multi-bagger, so I was actually expecting that the consumption sector will always have good growth. But if you see the 5-year chart of the company, the stock price has actually fallen from around the higher from 4063 to around the current level of 882. So it is still trading at 37 times, even though it is actually reporting fall in earnings. So it is not very attractive at the current levels, even though the equity is just 3 crores and the reserves are 283 crores. So we need to actually be very cautious, and we need to watch the earnings, and we need to keep stop losses for investments, as mentioned by me in all my videos. And if you see, I actually made a profit in these companies by I actually sold whenever the results actually fell. But I was not actually expecting that this company will actually fall this much fall in earnings growth. So there is some risk when we actually post any videos that we can actually we cannot actually predict the future. So the event for sectors like tires, cement, paper, petrochemicals, we have seen sharp dip in earnings. For example, that after 3 years there is a good growth, the next 3 years there can be fall in earnings growth. So similarly for Supreme Petrochemicals also, the video was taken down by YouTube. And if you see the video of that company, you can actually see that the company was actually posting good rise in revenues till it made a high net profit of around 653 crores in FY23. From there, it actually had a fall in earnings growth. Like this same trend was actually noticed for many other petrochemical companies, where a sharp fall in the profit was actually noticed over a 3-4 year basis. So after making a high of around 870, is now trading at 615 levels. So there is a this is a trend actually seen in many sectors like paper also. So what I did is these 5 videos related to the that I posted in my YouTube had been taken down by YouTube, since they were actually promoting some speculative activity. But I was not actually, I was displaying the facts based on the returns given by the companies and based on the expected potential in future. But sometimes our recommendations may not be coming true, because earnings of the companies can actually disappoint. So this is so I have also removed many YouTube videos of old that was uploaded in 2019 from a YouTube channel regarding the Infosys. Infosys has been a multi-bagger from the 2019 onwards. It has actually given many bonus issues and stock split and all, but that video is not relevant currently, because stock price has actually risen much. Now it is 2024, so I have removed that video of Infosys in the from my YouTube channel. And I also removed the video of Granules India uploaded in 2019. Granules India also had a good rise in earnings, but it has actually had also reported a fall in earnings 2 years back. So if you see the earnings of this company, you can actually see that its profit was a high of around 549 in FY21. From there it actually fell to 413 in FY22. Now it is around, it is actually around 479 crores. So that was actually reflected in the share price also. After making high of around 718, it is now trading at around 533 levels. So we need to actually watch the earnings of every companies before continue investing in any stock. So for example, JK Paper, if you see the results of JK Paper, you can actually see that JK Paper has actually resulted in earnings of JK Paper has sharply dipped from around 65 crores from 236 crores. So there is many industries like fertilizers, paper, chemicals are actually seeing a cyclical slowdown in their earnings. They are actually having lower sales and profits, so that can actually also result in the fall in the share price. So that is why I actually removed some old videos of. SAD actually recommended that the paper sector will always have some demand, but there will be some demand. But if there is sharp earnings growth reported for some period, there can be fall dip in earnings also. That is actually the results of paper companies also. For example, from the around 1,208 crores profit in FY22, the profit has fallen to 14 crores. It is still higher than the profit of around in FY 544 in FY22, but still considering that it actually made a sharp profit of 1,208 crores in FY23. If any investor has invested in JK Paper at that time, he might be actually sitting at a loss, because for example, if the stock price has actually fallen from around 548 levels to around 200 and 328 levels. So it is actually a great loss for investors. So I have removed the old videos related to JK paper, Kalpataru power, and Seshasai paper also, because the paper sector, petrochemical sectors, chemical sectors, textile sectors, all these are cyclic sectors, and we need to keep the earnings of these companies, watch the earnings of these companies, and stay invested only if we are actually seeing some earnings growth. And also one more point I want to highlight is that SEBI has made that only financial influencers can actually post recommendations in YouTube channel. I don't agree to this view because I am actually invested in the stock market from 2004 onwards, and I am invested the last 20 years. I am not SEBI certified, but in the last after COVID pandemic, after my salary got increased, I am actually my total gains in stock market is three times my investments. For example, if I am actually invested 5 lakh, my total profit in stock market is 15 lakhs. So there is no guarantee that there is no guarantee that a research analyst can actually give a recommendation that will not actually give result in loss for investors. For example, Polycab India is a stock that is actually was given a target of around in the last October. Many analysts actually given targets for Polycab India when the stock price was at around 7,800. It has many analysts has given target of 8,700, but now it is actually trading at around 5,589. So even a good analyst can actually make a mistakes in stock market. So the SEBI actually SEBI does not have any rules to make sure that the valuations of the companies are actually not trading at excessive. For example, I can actually take the case of one example, Page Industries. Page Industries is trading at around uh, 42,160. It is trading at around the 70 times its earnings. Even though the company is actually likely to report only around 673 crore profit for an EPS of 603 as compared to 510 last year. So it is only going to report 20% increase in profit. It is trading at 70 times. So SEBI has not have any rule to stipulate that it can actually rise only 0.2% or 0.1% or 1%. Considering the valuations of this company and the share price movement, we need to have filters in place so that because when the market actually falls, investors will be impacted most, and the economy and the country as a whole will be affected because of the fall of rupee. Because if expensive valuations is existing in the market, FIs can actually sell, and this will result in loss to the investors. So ideally, we expect that a company is actually going 10-15% should trade under 10-15 times. But we have seen that even new companies IPO listings, the companies itself is coming with the price earning multiple of 35-40 times. And if there is any sharp, because they have also given negative returns to investors, many IPO companies have given negative returns to investors, and they actually report sharp. For example, Dam Capital Advisors, which actually came with the IPO, it made a high of around 457. Now it's trading at 266. So it was actually available at 40 times its earnings. It is actually showing good growth in revenues. It is actually having good growth in revenues and likely to report higher profits compared to the last year. 51 crores net profit as compared to over 20 crores. But still, it is trading at very attractive, not high valuations, due to which it has actually given 50% fall in short price. So this kind of returns risk always exists in stock market. So why should investors actually stock market investors who are actually earning 1 lakh should invest in this company like this and make 50% loss? 1 lakh investment means the capital is actually reducing to 60,000 or 70,000 in this companies like this. So why should an investor make? So it is very important for SEBI to uh, prevent too much speculation in the market. So it is the regarding the action on financial influences, I want to say that it is not necessary that only people who have taken the SEBI certification will be experienced stock market investors. But if you are actually tracking the earnings and making wise investment decisions and keeping stop losses in place, we can actually reduce the losses. I had made a loss in many stocks, but I have made a multi-bagger investments in many companies. For example, one company I made a large profit was Avantel. Avantel is a telecom company. It actually manufactures satellite communication products, wireless telecom communication products. So you can see that the stock price is trading at 118 levels. It made a high of 224, But you can actually see that if you see the earnings of the company is actually growing steady growth in earnings from around 19 crores profit in FY22 is likely to 66 crore profit. But what is important is it actually given multiple bonus issues. It is given a bonus issue in FY22 from around 4 crores, and it gave another bonus issue in 2023 is to 1. So the equity capital is 49 crores. It is a very shareholder friendly company. So my cost, I had invested in the company 4 years back, and from there it from just around if you see the stock price, it was just around 2 rupees. After adjusting for different bonuses, it is now trading at 118 levels. So that kind of returns are actually possible to investors if they are actually willing to hold investment for long term, and tracking the earnings of the company, and holding for a 3 to 5 year basis. But there can be loss to investors also, as mentioned by me, for companies like dam capital advisors. So I feel that for valuations, SEBI need to take action, and should not be actually blaming good quality advisors, even if they are taken SEBI certification or not. So I will be I'll not be uploading too much videos in my channel. So I will be reviewing my existing videos, and I will be removing my videos if I feel the sectors are actually not giving returns. But investors are actually advised to keep track of the earnings of companies and valuations before making investment, and keep stop losses, because stock market can actually as long as the regulations and evaluations rule is not there, there is always a risk of gains for good quality good analyst, and loss to investors also if they are actually investing high valuations, because there is a good possibility of selling by FIAs or HNIs when the valuations become high.